Welcome to the Stanford FinTech Meetup, and thank you for joining us today. Today's meetup is focused on payments, one of the most vibrant areas in banking that has seen massive investments and incredible change over the past few years, with no let-up in sight. I'm George Ravitch, president of Ravco Marketing, a strategic marketing consultancy focused on fintech. And I'm one of the leaders of the Stanford FinTech Meetup group that's been around since 2017 and has close to 600 members. We have four excellent panelists who will be exploring the innovations and trends that are making a big impact on the financial services industry today. But before we begin with introductions and presentations, I'd like to level set the conversation by providing two impressive statistics. First, according to a McKinsey report, global payments is a $1.9 trillion business, representing 37% of banking revenues. No wonder why there's so much investment in innovation. And second, CB Insights reports that last year there was $35 billion invested into fintechs, with over 2,000 deals. And within that, more than $10 billion was invested in payments through 330 deals. 2020's numbers are expected to be significantly lower for obvious reasons. So the business is in fact very large, and very large investments are being made to find ways to meet both business and consumers' evolving needs. Now, let me introduce the panelists who will be discussing four of the hottest areas of banking today. Gene Nair has been an active member and leading voice in the global payments industry for 30 years. He recently joined US Bank as SVP of Payment Architecture, or as he calls himself, their payment czar. Previous to this, Gene has been a payments advisor to FIs, fintechs, and central infrastructures around the globe, and has recently completed real-time payment engagements in Latin America, Africa, and Asia. He is a board member of the US Faster Payments Council. Gene will be updating us on faster payments initiatives around the world. Welcome, Gene. Connie Thine serves as Senior Vice President of Industry Relations for the Federal Reserve System. She leads efforts to engage payment stakeholders in advancing strategies for improving U.S. payment speed, efficiency, and security. She is the Fed's faster payment strategy leader, which is called FedNow. Connie will be updating us on the FedNow program. Welcome, Connie. Raj Venkataraman is IBM's Global Head of Payment Solutions, with services in 28 countries around the world. As the P&L owner of this business, he is responsible for leading product management, development, sales, and marketing. He focuses on ensuring alignment of the product roadmap with client needs, building strong service delivery capabilities, and making investment decisions for growth. Raj will be updating us on the use of AI and machine learning in payments. Welcome, Raj. And last but not least is Mark Ranta, who leads the payment practice at Alacrity, a leading unified payments platform provider that supports three use cases: electronic bill presentment and payment, digital disbursements, and subscription billing. Previous to this position, Mark worked as a pre-sales engagement leader at Bottomline Technologies, a director of product management and marketing for ACI Worldwide, and as an analyst at Greenwich Associates. And he is a native of Connecticut. Mark is going to get us up to date on API, or open banking trends, that are growing quickly around the world and in the US. Welcome, Mark. Before we begin our topics, here's how we're going to proceed. Each speaker will spend a couple of minutes updating us on their topic, which will be followed by a roundtable discussion amongst our panelists. And while this is going on, you can send questions for the panel, which I will ask on your behalf. And then we'll move on to the next topic. Also, this program is being recorded, so you'll be able to review it on demand in the future. So let's get right to it with our first topic, real-time payments with Gene.
Fall on the middle path, not too many headwinds, not too many tailwinds. But on the other hand, if you really want to turbocharge it, and India is a perfect example. India has started slow, for all of the reasons, but then very rapidly they said, we're not going to charge, we're going to develop what's called an India stack. So they created um, identity infrastructure, they brought in third-party fintechs, which then made the user experience fabulously simple, and they jumped from the red slow growth line to the fast green line. Next, George. Of course, the question to us in US is, where are we going to be? And we'll talk about that. And the next two slides really give you just a couple of ideas that it's not just account to account on a smartphone. So here are the examples of a feature phone using a QR code, doing point of sale. Next slide. And some use cases around the world. So Barclays using QR codes to do point of sale. Google being one of the leading P2P vendors in India. And then, of course, integration with widely used apps and social media is driving a lot of these use cases in Asia. And again, so this is kind of a business thing where Alibaba will have the technology, and then let's say in Korea, Kakao Pay will bring in the social network, and together they will do what in US would be an equivalent of a Facebook Cash application. Next. I think that's to you, George. A couple of questions to me.
Sure, sure. Well, the first is, does anybody of our panelists have any comments on what Gene was saying? Okay, guess not. I'll start with a question, Gene. Is there any evidence so far that the faster payments in the U.S. is delivering the benefits that's promised for faster payments?
I'll give you a quick but a multi-part answer. First, I should have been clear that there isn't a single thing called faster payments. So in US, we currently have Venmo and Zelle and Clearinghouse, and they all, to the consumer, look like faster payments. And definitely they're delivering some benefits, but it's still early days in US. And I would say in US, we are rolling out slower than we would have liked. I would, however, redirect your question to two countries. One is UK, where in UK, after about 12 years, 10 years, payments through their faster payment system comprise 10% of all electronic payments, and they've passed the number of debit card transactions done in the country. So it certainly hasn't run away, but it has become a prominent way that people pay for the reasons that you would expect. You can do it on the weekend. It is irrevocable. And so people find that very, very useful. And then in India, it has really, really taken off. And there, I think it is exceeding the expectations. And in some of the African countries as well, where they're pushing the envelope in terms of using it in the market, paying for everything through their phones. That's working really, really well by bringing people into the banking who do not have a bank account. And then, of course, in China, where they have everything wrapped into a single app, that is dominant and has changed the paradigm.
Okay, great. Just one other question. If you can put yourself on mute, everybody, that would be great. Invariably, there's always a dog barking on a webinar. What services do you think that faster payments is cannibalizing? What current services will this replace?
So we keep having this conversation, and in US, we never like to cannibalize anything. But we do have some experience. People were afraid that we would cannibalize wires. That doesn't happen. All that happens is wires grow at a slower rate because new use cases go on real-time payments. But if you used to pay something by wire, you just keep that going. And we can talk about why. ACH would frequently experience 5 to 10% drop and then resume the growth. The two areas which really are cannibalized, one is check, and that just accelerates the demise of check. And so, for example, from a US bank perspective, I can say that we have a patent pending technology where we can take a picture of your check and convert it to real-time payments. The other one is cash. And today in the COVID world, nobody wants to handle cash. We're all handling things on our phone. And although we haven't yet gotten pay by real-time payment into my Apple Wallet, I don't think it is that far off.
Okay.
Hey George, one quick comment there. I think in and to Gene's point, the cannibalization. I think when you look globally, it's important to note that the networks for credit cards have significantly different interchange rules and regulations. So we're still living in the land of high interchange fees and fees for credit cards. Globally, you see less of that. So the adoption on the consumer level of real-time payments, especially in the UK, like Gene mentioned, is going up, primarily because the banks are promoting it pretty heavily. So it'll be interesting to see in the US as the systems come in place and real-time becomes more available, how much we see that consumer demand drive banks to adopt the real-time rails all the way out at the point of sale terminal. So just a quick note on the differences in the geographies.
Great. Thank you. Thank you.
George, sorry, go ahead.
I think adding to that, you're touching on the broader point of those adoption curves, and talking with folks across a lot of those markets. A very big driver is the extent to which, the broader ecosystem, the fintech organizations, the other providers, even, end users, corporates, are really engaged very early in the process of building out the end-to-end experience. And I think that's a little bit different than our experience with traditional systems, where, perhaps collaborating within the banking system gets you pretty far in terms of controlling and driving adoption. The lessons learned we're hearing from those markets on the slow curve is that engage, the end-to-end ecosystem early. And I think we're still, the US is a pretty complex marketplace. And so I think that's a challenge before us in terms of, getting our adoption onto the right curve.
Great. Thank you.
George, the other point I wanted to make was to Gene's slide where he had the map of the world and, real-time payments in different regions around the world and different payment schemes. What's interesting to note is there's very little in common among all of those schemes, right? So we're seeing with the adoption of ISO 20022 standards, et cetera, a little more of, let's call it coming together of the different schemes and some commonality in adopting those standards. And I think that'll continue to grow. But right now, maybe it's nationalism, maybe it's the specific needs of the region. Each of the schemes kind of operate on their own.
Okay. Thank you. All right, we're going to move on. Connie, go right ahead.
Great. Thanks, George, and good afternoon, everyone. Appreciate you joining us today. George, I'm not seeing the controls, so I'm going to ask you to advance the slides for me. So go ahead and move ahead. I'm going to talk about, Gene talked about implementations around the world, and you saw that the US was yellow, I think, on his map. We do have a real-time payment system in the market today, operated by the clearinghouse, but I'm going to talk about the Federal Reserve's decision last August to build an instant payment system in the US. Before I talk about those plans, I'll just make sure that everyone has a little bit of context around the Federal Reserve's role in the payment system and why we would be building an infrastructure like this. You know, virtually since the Federal Reserve's founding, we have had a focus on helping to ensure the safety, the efficiency, and the accessibility of the payment system in the US. And that all Americans, consumers, and businesses can access payment services and to promote commerce and economic activity. We have done that also almost from the beginning. Certainly as a policymaker and supervisor, we help to ensure safety and some of those things. But we've been an operator of payment systems supporting clearing and settlement also in our 100-year history. And in doing that, you know, we've collaborated and operated alongside private sector providers. In doing that, we've built a network and connect, you know, almost 10,000 financial institutions to clearing and settlement services in the US. And it's really that history of serving financial institutions and facilitating payments, clearing, and settlement and this robust network that we have in place that led the industry to call on the Federal Reserve to participate in the real-time payments environment as a provider. So moving to the next slide. As I noted, you know, but based on the Faster Payment Task Force request that we consider operating a real-time payment system in addition to building out settlement services to be accessible 24/7. We did a very in-depth analysis involving a lot of public comment and announced last August that we would proceed with developing what we're calling the FedNow service. This service will support 24/7, 365 instant payments. That not only, and I say instant payments to be very explicit, you know, versus a broader description of faster payments. When I say instant payments, it's not only a real-time experience for the end user, but it's a payment that instantly clears end-to-end, but also settles on central bank books between financial institutions. And what that means in the simplest terms is that there's no credit risk for anyone in that entire payments chain. End users have their money and can use it instantly, but banks also have cleared, exchanged funds between them in parallel with that end user experience and don't bear any credit risk for the transactions. So that is what we're building. Again, one of our key objectives is to ensure broad reach to all consumers and businesses. And so it'll be available to all financial institutions across the country. It'll facilitate these convenient instant payments that end users really expect. And by offering it alongside private sector options, we're providing choice in the marketplace and competition, in addition to, you know, security resiliency by having multiple systems. If you consider in some ways very different than other markets, there isn't a single payment system in the US that provides all services, where there is a sole operator for a type of payment system. Check clearing, ACH, even wire transfers, cards, debit, credit, there is competition and multiple services available in the market. So this is consistent with, you know, our history in that respect. The service, we announced it last August. We have been collecting feedback from stakeholders in order to finalize the design of the service. And our expectation at this point is that it will be available in the market by 2023 or 2024. As part of this design process over the last year, we have been finalizing the features, the roadmap, what will the initial release, as well as future releases possibly look like. And in conjunction with that, we'll be able to more specifically map out the timeframes and announce a more specific release date. We do expect to announce those things yet this year in a Federal Register notice. So flipping to the next slide, I will just note we do, back to my earlier comment about how important it is to engage all stakeholders, the full ecosystem in collaborating to build out these capabilities and that end-to-end value proposition. We are inviting anyone who's interested in engaging as we develop the service, in innovating around the service and building on top of it, to join our community, to follow what's going on, and to participate as we have these input opportunities. So there's some information here about how you can engage with us, but really would welcome, especially participants from the fintech community who will be so critical to developing those end user services and benefits. So with that, George, I'll stop and invite questions or comments from my other panelists.
Okay, great. Thank you very much, Connie. One question I do have for you: on your advisory boards, you have, I know about fintech and financial institutions. Are there other kinds of companies represented there, and what are they telling you?
Yeah, so we just announced several weeks ago establishment of a new FedNow community. And it is open to anyone and everyone who wants to participate. We're looking for folks who are willing to commit time in supporting our design and development and implementation of the service. And we really are hoping to get a very diverse representation of expertise, technical expertise, but also, business expertise, people who want to help us think about what are the use cases, what's the value proposition, what are my operational challenges and issues that need to be addressed. So we're inviting end users, corporates, technologists, bankers, providers, fintech, to participate as part of that community. And I will note that it'll be an open enrollment. You can join at any time, but we are having a formal kickoff of the membership as it stands the week after next. So if folks are interested, I'd really encourage you to sign up now, and you'll be part of that initial kickoff. Okay. That group will pull working groups from that as we have issues that we want to address in design. We'll survey the membership of the community when we have questions about design or information needs. Those folks will hear about opportunities, when we're ready to launch, to adopt, to pilot, other types of opportunities. So hoping we get really strong engagement.
Right. Yeah, thank you. Any comments from the panel? Okay, let's move on to the next topic. That's Raj, AI.
Thank you so much, George. I wanted to talk about AI because it's one of those things that I think it comes up in every discussion, right? Everyone wants to use AI. Everyone wants to, has heard about, their competitors using AI. So for our clients, banks, financial institutions that are in the midst of a digital transformation, given that we're in an age of instant gratification, client needs are driving a lot of the digital transformation within these financial institutions, but also some of the things we just, faster payments, immediate payments, are requiring us to move away from how we did things the last, 4+ decades with new payment types coming in for the first time. and we're truly having to transform. And that means actually starting to do things a little differently and start to leverage newer technologies and newer processes, right? At the heart of digital transformation is there's few different elements to digital transformation, but one of the key aspects of that are critical to success in the digital transformation is what you do with the data. We're starting to quickly realize that there's a big difference between clients that leverage, that know where their data lies, are managing it, maintaining it, and accessing it appropriately, are really sticking out from the rest of the pack. So on this slide, you'll see that 90% of the people we surveyed said that they understood the need for accessing and harnessing the value of data, but quickly realized that there's a very, very small percentage of that 90% that are actually getting what they want out of it. And that's because they're still trying to leverage some of the newer technologies, some of the newer processes, still using data where it lies, and that requires change. So just pivoting from that to just talking about AI, right? So what is AI being used for? At a high level, it could be used to predict future outcomes. So in the financial world, people can look to run different models, understand risk scenarios, etc. Right? So people are using it for everything from their financial portfolios to business planning scenarios, etc. Optimizing people to do higher value work. So AI, machine learning technologies have the ability to kind of push us further up the curve. It doesn't mean that we separate what machines do and what humans do. Instead of artificial intelligence, we like to call it augmented intelligence, because we take what machine does and that makes us better, and we're able to be better decision makers, better operators, and we're able to come up with new business models sitting on top of the value that technology provides. Automating decisions, processes, experiences, again, just speeding up everything we do and making it faster, efficient, and again, cost effective. And I just touched on, new business models coming in. Given we can do all of these things faster, and we're able to harness a lot of the value out of artificial intelligence and machine learning. There are new business models in every industry, especially financial services. Now, having said that, I think everyone recognizes this, but when we get into the heart of it, we find that most people still look to AI and some of these new technologies for primarily cost savings, which seriously limits what you can do. And the art of the possible is so much more. Again, the people that are succeeding, the banks, financial institutions that are leading the pack, are the ones that truly see this as a competitive differentiator, and more so than trying to do things better and in a cost-effective way. So where do we go from here? Everyone wants to use AI. We're seeing many clients that start with, hey, I heard bank ABC or financial institution XYZ is using AI for these use cases. We want to do that as well, right? So there's a certain element of fear of missing out. But again, it needs to start with a little bit of soul searching to figure out what it is you really want to get out of it. And then what is the data that is being leveraged? What are the processes that are being included in this for this application of artificial intelligence and machine learning, and what value you truly want to get out of it, right? So you've got a couple of metrics here from clients that we've surveyed, and this is actually, this came out of a report from MIT Sloan. 81% don't understand the need for the data that's needed for AI. They understand why they want AI, but they don't understand the inputs that actually go into it. Again, another data point that shows that people that are leading and are competitively distanced from the others are people that have a robust data architecture. And it's for this reason that at IBM we like to say there's no AI without IA, information architecture. So with that, where do we get started, right? So this is what we call the AI ladder. So once we've established that a client wants to leverage AI for some of their top strategic areas, primarily payments or other core processing, we start with collecting the data. Do you know where your data is? Are you collecting it all? Is it easily accessible by everyone, because you want this to be enterprise level, not just for small pockets? Again, you limit the usage if you do that. um, Start to get it organized, create the foundation for an analytics practice discipline within the organization. Analyze. So once you get the data, you know where it is, it's organized, then you start to apply next gen analytical tools. But this has to be done with transparency. People need to know what goes into it. They need to know the algorithms that are in it, the logic, such that you're not working with a black box. If that happens, then the level of trust in the overall application of the artificial intelligence, again, at an enterprise level, becomes an issue. Last but not the least, you start small, specific use cases, show value, and then infuse it throughout the enterprise, right? So by doing this and modernizing, by taking your infrastructure onto a hybrid, a more modern cloud architecture, being able to deliver the value of AI through a more nimble platform, and a service model, is what we're advocating. So that's kind of where it sits in terms of the importance of AI, leveraging data, and the overall data, AI ladder on how you get started. And obviously, there's a lot of data behind each of these steps. Happy to share more with folks if they want greater detail.
Okay, thanks, Raj. Raj, I have a couple of questions. First, can you give a good use case that's current, that's actually being used right now? Is it being used to project liquidity for banks? I mean, what kind of services are actually using AI right now?
So I think AI is prevalent. So this isn't something that you would expect, is something out in the horizon. It's in application now, in production in many, many, many so just thinking about financial institutions and the banking industry. It's being used for everything from process automation, customer support, as you mentioned, scenario planning, for liquidity, cash management. Um, but the one biggest use case right now is fraud detection. Um, and again, we went out and bought a company that leverages machine learning AI. It has now been rebranded as Safer Payments within IBM. But what it does is essentially, in an open platform, provides clients the ability to, in real time, track fraud detection, and reduces the high percentage of false positives. Right now in the system, you have somewhere between, and I'm being very kind here, I think we're somewhere between 90 to 95% false positives. I think with some clients, we're seeing as high as 98, 99%. That means for a very, very large percentage of transactions are incorrectly or falsely tagged. What AI does is, and machine learning in this solution, and there are others in the market as well, what they do is start to, through their data models, learn and actually start to define the models that are in place, the rules that are in place. It has the ability to suggest to the user, hey, we did this the last 3 times. Have you thought about tweaking it? I'm noticing these other trends. And it connects dots that may not be immediately visible to the human eye, right? Let's look at it that way. So again, augmented intelligence, machine learning provides the trends, provides suggestions, you augment the models in real time, and you're off running, right? So fraud detection is substantial. Now, again, we've just talked about real-time payments. Faster payments means faster fraud. Gene talked about faster payments in the UK. Within the first 6 months of them going live in 2008, I think their online fraud more than doubled or tripled, right? So you need to have the newer technologies to be able to mitigate, resolve, and again, at 95, 98%, false positives, you can think about the amount of effort, cost, time that is being put in there, which is not productive. So again, you leverage AI, machine learning to be better there.
Great, thank you. Any panelists, questions, comments?
Yeah, Raj, I was just going to ask, you hear the term, especially in financial services, responsible AI, that's generated from kind of the sorts of issues or considerations that factor in because of how highly regulated we are and particular risks. Can you talk about what some of those challenges or issues are?
Sure. I think, what we're finding is there is a base set of ethics and discipline that, as an industry, I think there are some organizations that there's a couple work groups on that and a few other industry work groups that are thinking through this, right? As we start to do this more and it's utilized more, people are starting to think through what are the rules of engagement, if I can call it, right? In terms of adopting that more. And people are starting to think about that a lot more. It just blind application and letting AI go out and leverage everything that you have in your enterprise is probably not the right thing either, right? So there is a lot of thought going into that. And by enterprise, we are, with some clients, we're starting to put some rules of engagement and some governing principles to make sure that this still aligns with the corporate agenda and the corporate, vision statement, and make sure that we don't have, it's utilized unethically.
Raj, I have a question. How does a small company with a small R&D budget get started with this? Do you have any suggestions?
Sure. I think, I think this is, it starts with, like I said, a very, very good understanding of what it is you want to use it for based on your strategic priorities. Just because someone else is using it for fraud, if fraud is not an issue, I'd be surprised if it wasn't, but if it isn't a big issue, you don't want to be in the Me Too, they're just kind of, joining that, group as well. So it has to be, what do you want to use it for? Second is, there are a number of solutions out there, and we have to be diligent and do our homework around finding solutions that are easily deployed, managed. And so, for example, the rules changes, etc. Every time you need to make rules changes, you shouldn't need a PhD from MIT to show up to help you with it, right? These are things, like you said, do you need a big, large development budget or an R&D budget to be able to support this? You shouldn't need that. There are lots of solutions, like our safer payment solutions. We have a bank in Portugal where we the head of payments shared that she actually had people that stayed behind after work and just playing with the models and tweaking it on their own because it was fun and exciting, and they were looking to see how they could slice and dice the data in different ways. But it's about the ease of usage. You should need a whole army to be able to support you and help you for each step in the process. So being able to find a solution that's open, something that you understand the algorithms and understand what lies at the heart of it, and being able to maintain and deploy it easily and tweak it as you need to. It should be, the user should have the ability to do that, as opposed to relying on a technology vendor.
This is Gene. Actually, one of the interesting challenges in this for banks is we want to commingle our data, because obviously AI gets better the more data there is, but we can't, right? Because we're not allowed to share. Do you know of any interesting models where learning is local, but the models are combined based on learning in the walled gardens?
So, there have been many discussions, and Gene, you might have been, you mentioned some of the countries, so you might have been part of these discussions as well, where you think about the anti-money laundering, you think about some of the fraud data, etc. That's there. There have been many discussions about starting to pool that data at country level and leveraging AI such that as an industry, everyone's able to do better, right? And as you pointed out, that's easier said than done. Not everyone wants to. Even within an organization, um, we're seeing people being very territorial about what their data is. They want to keep it to themselves. That actually is one of the bigger inhibitors for enterprise-wide adoption at this stage. Right? So again, coming back to what is the cross line of business? What do you really want to get out of this? What is the art of the possible? What can you get if everyone behaved and aligned with the rules of engagement and ensuring you hit, you stick to those? I think there's a little work to be done as people gain more trust in these models and they see the value getting out of it. I think people will jump on. But I think there's an adoption curve there, Gene. I think we're getting started now at this stage.
Great. Okay. Just ask everyone to put themselves on mute if you're not speaking. We hear a lot of background noise. I appreciate it if you could put yourself on mute. Thank you very much. Okay, to our last speaker, Mark.
Thank you, George. I feel a little bit like Chris Farley in the Matt Foley skit. I've been casually waiting in my basement eating a steady issue of government cheese, ready to go. So I get to bring us home here on the last topic with APIs and open banking. And I think Raj just said it best, but he said it slightly wrong. He said IA was the right terminology. He forgot the P and said it backwards. So it's really the APIs that make these trends really sing and work. I think when you look at APIs and open banking and AI and real-time payments, the thing that really helps bring them cognitively together is this new technology with APIs. And George, for some reason, I still can't control the screen, but I will say, thankfully, I only have one slide. So you only have to hit it once. So I thought the best way to break down the open APIs and open banking was to look at them kind of at three levels. Let's look at a global level, a national level, and then a very local level in terms of what individual banks and financial technology and technology companies can do to leverage the trend. So if we start at the global point of view, you have to look at this from what was going on in the industry about 10 years ago in terms of financial technology companies. There was a really big boom for personal financial management tools. So in the US, it was mint.com. Globally, there was a company called Strands. But what they were doing was going in and using a technology called screen scraping, where an individual would go in, use their online banking credentials, hand them over to this company, and they would go in and actually scrape a screen down for information to bring it back and aggregate it to start giving users insightful information. And in the personal financial management space, it was around budgets and putting together nice visual, contextual information about their data. The EU, being the European Union, kind of threw up their hands and were like, hold on, whoa, whoa, whoa. This is a really big risk. You're turning over personal identifiable information to a technology company, and then they're going in and entering it and scraping these screens. That is in direct, it goes against what the EU is really around individual and protecting the individual's data and protecting individual rights. So they made an update in 2015 or 16 to the Payment Service Directive. So they introduced the Payment Service Directive 2, or the update to the Payment Service Directive, I think is the official name in the European Union. But what it did was kind of give a holistic regulatory view on how financial technologies could interact with banks. And the UK, kind of doing its own thing, said we're going to roll out a regulation called open banking, capital O, capital B. So I purposely put lowercase o, lowercase b on here to differentiate between the regulatory UK open banking regulation and the general trend of open banking. But at the heart of both of those regulations is really about leveling the playing field for innovation and allowing access to systems that are dominated at the bank level. So as Connie was mentioning and as Gene was mentioning, when you're talking about real-time payments and payments in general, most of the international money movement systems are bank only. You have to be a regulated entity by the local government agency, registered with the local government agency, and under some pretty strict governance. That limitation made it so that competition is really hard to create, and that barrier of entry outside of the US is really high. Most of the global markets are dominated by 4 or 5 banks. Not dissimilar to the US in that sense, but it's a big sharp fall off into the next set, and it's a much smaller pack to fighting for innovation. So that part of the regulation from an open banking standpoint and the guidelines that were put in place was to increase competition. The other thing it's doing is standardizing the access. So putting standards in place to say this is what an API is going to look like. There's different groups depending on where in the globe you are, but the Berlin group for PSD2 and the open banking, the CMA and the Open Banking Authority for the UK, but they're putting together these regulations and guidelines around what these APIs can look like. So a developer of any sort can go in and actually look at the APIs and understand how to use them quickly. Again, making it so that that innovation can happen regardless of whether they're a financial institution or not. So as we move to that next level down on a national level, I think we mentioned the screen scrapers like mint.com and realizing that there was this better way of getting technology from a screen scrape. A lot of them pivoted, especially when mint.com was bought by Intuit, to using APIs and really connecting into a bank. And that API connection wasn't quite at the level that I would say is an open API, but really kind of that first step of really getting access to these backend systems and information on a pull versus having to constantly log in through using user credentials that are easily, or quite frankly, if someone was broken into, could drain your bank account. So that really personal identifiable information went backwards and isn't there in that API connection. But what's pushing us at a national level? We don't have regulations in the US around open banking and use of APIs. But we do have is a lot of competition. So as I mentioned, globally, you have 4 or 5 banks that dominate each market and each local region. In the US, we have similar 5 banks, but then we have thousands of institutions that are going and trying to really compete and try to earn our trust as consumers in the market to use their technology. And part of that is really looking at how they can put out the best new user experiences, how they can put these best new offers in place. So it goes beyond just who has the best mortgage refi rate. I'm sure a lot of us use Webster Bank or in Connecticut, but there's different things that banks are competing on, and that competition is really what's driving this move to adopt open banking. And Raj mentioned it as well, but there's also this transformation trend going on where the IA is actually also being opened up to leverage APIs as that technology to kind of allow and expand their platform of offerings and quickly adapt to what's happening in the market. So the final step here is getting down into the local level. And I think that this is where we start to talk about APIs in more of a differentiation between the technology itself, which is enabling these cool things to happen, and the organizational mentality required to make them really work and make this innovation happen. The technology itself for APIs isn't really new. I'd have to go back, but I think Wikipedia said it's sometime in the early 90s when APIs first hit the scene and leveraged in HTML5, which I think was like 2011, really broadly. If you think about it, Google is based on APIs. So whenever Google really shot off the market, 2008, 9, 10. That was when the API adoption at a technology level really took off in the US. Taking that to a bank, banks are traditionally very conservative. So that idea of ripping out the heartbeat of some of these banks, some of the largest financial institutions in the country are running core systems that were built 10 years before I was born. So that heritage tech debt that's sitting out there at these institutions, the same problems that AI are running into, API technology and open banking technology are running into as well. However, there is some really good stories going on at a technology and innovation level, and that's really where this fintech space is built on. Plaid just sold to Visa for $5.3 billion. Their whole go-to-market strategy was built around API connectivity into banks and really replacing that, handing over your user credentials and leveraging an API call to simply log you into the bank to validate you are who you say you are. Stripe has a $36 billion valuation, and they are built on a simple payment API that sits in a background of a merchant experience to really enhance the payment experience or make the payment experience invisible. A lot of the old technology of a generation ago, you'd have to go out and build these really complex point of sale build outs, basically from the same guys that you see building them at the grocery stores and any of the local markets. But Stripe and Square really kind of revolutionized the way we think about that point of sale checkout experience. And again, those are built on APIs. And so the areas of innovation that this really is looking to, if you're out there and working on starting up your own fintech, payments, embedding them in the payment experience, leveraging this new trend that we're seeing in the US, and whether it's the upcoming FedNow system or TCH's RTP system, or even Ripple or some of the new technology out there in terms of money movement. We're in the US, we hadn't had a new payment rail, a national payment rail since the 1970s. ACH, I think, was the last one to go live. George may have to correct me on that, but at a national level, we didn't have a new payment rail. So there hasn't been a chance to really recreate from the bottom up the system. So I think from it's a really interesting time and an innovating time, but this idea of open banking and APIs is at the heart and center of it. And being able to build a good strategy around how you are going to embrace APIs and how banks are slowly allowing more and more access via APIs, I think we're only going to see the innovation cycle continue to go. I don't think there's a bubble so much for fintech as maybe some air coming out of a bigger balloon, and we'll be blown right back up, George.
Okay.
So I'll hand it back to you, George, for questions and kind of expand with the rest of the panelists.
Sure. But let me ask you one quick question. The Europeans have a mandate for open banking, and the U.S. does not. So which approach is working better?
The classic carrot or the stick. I think honestly that we would see quicker innovation right now if there was regulation. I think you'd see a push for it quicker. However, the competition is driving the US at a rate that's probably consumable to the market. If anything, if you look at Europe with PSD2, they just extended the SCA update, the secure custom authentication, whatever the actual acronym stands for, but their authentication for SCA was pushed out another 6 months. So they're not meeting the deadlines that are being put into the regulatory standards. However, some would argue that PSD2 and UK open banking were actually put in place to help the bank see the need to digitally transform. So you're seeing numbers out of folks like Lloyd's, TSB, and some of the others that are putting billions of dollars into overhauling their technology infrastructure that, while are going to meet the need of PSD2, are kind of positioning the bank for a modern 21st century architecture.
And I would just add a couple of things to what Mark said. One is the reason why secure customer authentication is delayed is there was a request to European Banking Authority to put together technology guidelines without actually referencing technology, and they failed. They put out something that could not be implemented. And so this points out that regulating innovation is hard work, especially when you say that you want to use the light touch and be future proof. You're putting yourself into this untenable corner. What is happening in and there are different things. I was actually in Europe speaking on on an open banking panel, and a head of Equins, which is an equivalent of our clearinghouse, said this is the last Rubicon. If we don't take this here, we're going to lose the European banking model, and we're either going to go to the Chinese big tech or an American free-for-all banking model, and we're going to lose our uniqueness. But the point is, they can't agree, and so even though it looks like they're regulation driven, to a large extent, it's a lot like US, where clearinghouse has taken part of the leadership position in building the data sharing through a company called Avoca, where Nacha is taking part of the lead through their Theseus, I believe, APIs. And then each of the big banks is also saying, I'll play over here, but I will also roll my own. So even though the labels differ, it really is more us versus the Chinese big tech model, I think is what we're saying. Would you agree with that, Mark? It's okay if you don't.
Yeah, no, I think if you ask most bankers who keep them up at night, it's going to be Google, Amazon, Facebook, maybe Alibaba, Netflix. You'll hear those because at the end of the day, the client is just the individual consumer is looking to interact with the brands that they want to be interacting with. I think it was Bill Gates. Everyone needs banking, but we really don't need banks. Or I'm butchering the saying, but that idea of the services that banks offer are are the reason why banks are needed is because that access to these systems. As the systems become slowly more and more accessible, we could potentially see that shift to technology driven first. But I think with a proper API strategy, there's plenty of space for the bank to continue to own its position and grow. And I think that hurdle and that fear of we're gonna keep the doors up and locked that if anything would accelerate towards the big tech model that the Chinese have. Whereas if you started adapting to this open banking and open API and leveraging AI and really taking advantage of the new real-time rails, the banks that we have in position today can really transfer themselves into new banks of the future that are focused on protecting our money. And I think that shift and that understanding and bringing together these new experiences are going to kind of be key. But if they decide to clam up and not allow access, Gene, I'm right there with you. That Chinese model of working with Google and Amazon is going to be extremely attractive to a very large population.
Yep. And certainly speaking for US Bank, we're rolling out APIs to our customers. We do a lot of the things that we would have done under the open banking mandate. We're using one of the normal API gateways that you would expect to get. I'm not going to name names, obviously. And we're going through building experience APIs by speaking to customers and then attaching them to domain APIs, which are driven by the regulation. But we're missing the industry-wide standards, and Europe had a vision that they might get there, but I don't think they are. So we're in the same place.
Okay, that's pretty much the end of the time we have. Any further comments from anybody? Okay, thank you. As everyone can see, I have the email addresses of the speakers, and if you'd like to get in touch with them and ask a follow-up question, that'd be great. And lastly, I just wanted to mention that we have another webinar. The Stanford FinTech group, Meetup group, has got another webinar scheduled on innovation and investment management with David Teaton, who's a venture cap partner of Hoff Capital. It'll be a very interesting conversation. It's on June 25th at 2 in the afternoon, and you can sign up for it on the Meetup website. So this concludes our program today. Thanks to the panelists, Gene, Mark, Raj, and Connie. Appreciate your time and all your good thoughts and insights. So thank you very much for that. And for everyone who joined with us, thank you for joining us, and have a good rest of the day.
Thank you, everyone.